Morning, everybody. Hope everybody's doing well. This is part 3 of our work from home series, how to stay sane when working from home. Today we have a special guest. He's a CPA here in Corpus, Denny Meyer, and we're gonna talk a little bit about some of the financial aspects of everybody working from home and some of the programs that are out there that are supposed to help small businesses as they get ready to work from home or as they have been sent home and dealing with maybe being closed or maybe being diminished in what they're able to do normally. And so I want to talk to Denny about some of those things. We've got some tips and tricks about working from home and some technology hacks. Specifically, we're going to talk a little bit about Zoom and some of the ways that you can make Zoom more secure. I'm sure you guys have seen some things in the news about Zoom not being as secure as people would like. So we're going to talk a little bit about that. So I guess first, welcome, Denny. So glad that you could join us. So Denny's with a firm in Corpus named Fields Nemec. He's one of the partners there, and he's actually my CPA. So I've relied on Denny now for years for advice and planning and all the things around the numbers side of the business. Specifically, we got to work recently on what's being called the PPP program, and so Denny, I want to give you a couple minutes to maybe describe the PPP program and if it's worth it or not, and whether or not every business should apply. So take it away. Give us some information about the PPP.
Okay, great. Hello, everyone. So the PPP program is a payroll protection program. It was put into law on March 27th by the federal government. And essentially what it is, it's an initiative for small businesses during this downturn in our economy and our slowdowns and the slowdown in many of our businesses to keep their people at work, to keep them off unemployment essentially. And so the PPP loan is going through your private lenders, so whoever your business banker is, that's who you would generally apply through. The banks are honoring their customers first, and so that's a key element to this. With the PPP loan, essentially what happens is we look based on your business metrics, and that's whether you're seasonal, ongoing business that's been around for a while, or brand new business. And there's some specific mechanics there, but essentially we figure out what your average payroll is, and then we multiply that times 2.5. So we figure out your average payroll for the year, divide by 12 to get down to your monthly payroll. Multiply that by 2.5, and that is a loan that's available to you from the SBA. It requires no guarantees. It requires no collateral. It really requires no credit, if you will. So you don't have to have, they have a specific term for it, but essentially you don't have to go to obtain credit anywhere, but you will obtain it from the SBA and the bank associated with that. So with that loan, they will loan you up to 2.5 times that average monthly payroll. For most of us that have been around for a couple of years, that's going to be our 2019 payroll information. And so from that, you will apply through your business bank, and they will then process the application, run it up to the SBA. There's about $350 billion that are in the pipeline. Now, a good chunk of that's already been put to use because people have been applying since last Friday. But once you receive those monies, the trick, and that's the beautiful part of all this, is you'll get a 2-month, an 8-week window from the day you receive funds that you will build up what we call a forgivable amount, right? That's the forgiveness period. And essentially what will happen there is they will allow you to apply for forgiveness of the loan, and it'll be based on the payroll cost you incur for those 8 weeks after receiving funds, plus rent and utilities and anything that you outlaid for mortgage interest. Now, the trick is 75% of it does need to be payroll related. And that includes some benefits and things like that if you're sponsoring healthcare or 401k match or whatever it may be. And so we'll build up an equation there, get that number. That value is forgivable potentially, as long as you meet a few criteria. And those criteria are based on head count and based on you maintaining the quality of your wage, so that you're not decreasing or cutting wages by more than 25%, I should say. So that's kind of the boring accountant way of explaining the PPP loan. It's a great opportunity for small business, and it's a great opportunity to keep your people employed. And I think that's the biggest thing. And lastly, you know, that forgivable piece is huge. It's unprecedented. And whatever amount is forgiven by the SBA will be tax-free to you. So there'll be no taxable income on that amount of money. So for some companies, that could be a large sum of funds that will help you navigate this downturn that we're all facing.
So are there any businesses, Denny, that you would say maybe shouldn't apply? Like, is there any reasons or things that you guys have seen in the last week where you kind of discourage somebody from applying and trying to get this money to kind of weather the storm, or is it pretty universal right now that you're just telling everybody to go ahead and apply and work through the process?
No, that's a great question, and we are not telling everyone to dive right into it. Now, if your business continues to operate right now and you have yet to furlough anyone, and you know you haven't been fully compromised by this downturn or by any stay-at-home policies that have been put out by our state and local governments, then that loan may be right for you because you're actually going to have the payroll there to get it forgiven. However, if you're a business that has been impacted terribly badly or shut down or whatever it may be, give you an example, a lot of my dentist friends are not working right now, or they're at real minimum activity, only handling emergency cases. So their businesses have almost completely been shut down. The same is true for orthodontists. You can see some of that with certain restaurants, not all restaurants, but certain restaurants. Fast food seems to be doing well as a replacement. So if your business is truly shut down like that, you know, non-essential medical or beauticians, hair salons, things like that, you may not want to apply for that loan just yet. And the reason being is that you're going to basically bring a whole bunch of people back to work that are on unemployment already if you furloughed. And quite frankly, they're probably making more money right now on unemployment because the same bill that created this PPP loan also created the Federal Pandemic Assistance Program, which is a federal unemployment supplement. So those people that are applying for unemployment right now are, in addition to getting their state unemployment value, which is usually about half their wage, they're getting a $15 an hour payment from the federal government. So just to put that in context, if you have a $20 an hour employee, which is fairly typical, that person is probably making around 25 bucks an hour on unemployment. So if you're shut down and you've already furloughed them, does bringing them back really add value to them and or to your business when you can't operate? And the answer is no. And so in that case, you probably leave things be. And that's what I've advised those clients. And we have 10 or 15 applications that are ready to go, signed, ready to deliver, but we're not going to deliver them until we know those businesses are ready to go back to work. And that's what I would recommend to those type clients.
And some of that, if I understand what you just said, so if you've already furloughed people because your business was dramatically impacted because of the way the forgiveness works, that period of forgiveness is based on like whether when you ramp back up and you actually have people working again, right? So if I understood you right, you're telling them don't apply now, they're going to delay and maybe apply later when their business does ramp back up. Is that understanding right?
Yeah, precisely.
Okay.
And we made that, well, you know, I was making that recommendation last week very prematurely. And it was a little bit of a gamble, but on Tuesday, Tuesday, the U.S. Treasury came out with an update to their frequently asked questions, right, their FAQs. And on that, they said you cannot defer your loan. So what I mean by that is if you've been approved by your bank has 10 days from approval to basically execute the loan. And if they don't, then it no longer is valid. And so you lose the loan essentially. At least that's the current process, the current procedure. And so point in case there, most of those dental people aren't going back to work in related industries, most likely till mid-May. So if we go and apply for that loan today, within the next 10 days, we'll receive proceeds. And our 8-week period starts right there when we originate the loan, when we receive those funds. And so the clock's already ticking, but we have no one working. So we're going to have a 4, 5, maybe 6-week window where we have zero wage forgiveness. And that then jeopardizes forgiveness of the whole loan, because now are we going to make the 75% threshold for our payroll forgiveness piece? And then B, do we really know if we're going to go back to work in mid-May? We don't know yet.
Okay.
And so with all that, it's just too much uncertainty to take on this loan, because if you do not get it forgiven, the loan is, it must be repaid within 2 years. Okay. It does carry 1% interest, but it's a 2-year note. So, we got to be very prudent in our strategy here. And yeah, I mean, do we run the risk of funds running out? Sure, we do. But we've already seen conversations at Capitol Hill, in Washington, where they're talking about throwing another $250 billion into this program. So, I mean, we believe there's going to be more money there down the road.
Okay. So anybody that's listening needs to pay attention to the timing aspect of it so that you get the reporting period to match when you have the need for the funds so that they can be forgiven. You don't want to find yourself where you've received the funds and then don't have the need anymore. Great. Next question I had for you here was kind of around collecting all the information. If your CPA has all of this access, to your books and things, that probably makes it faster for you to generate the reports and get things together. But if somebody doesn't, what are the things that they need to go putting together? What do they need to go put together right now to get prepared if they haven't already applied, or if they're maybe planning, like you said, on applying in a couple weeks when it makes more sense for them to apply?
Yeah, so definitely the CPA is a great starting point. The bankers are inundated; they can't prepare the app for you. They can just process it. I'll tell you that much. And every banker, I have relationships with most banks in town, and they are just overwhelmed, and they're getting bad applications, and they're having to send them back, and the information's not there, or they're getting bad information, and it just bogs down the process. So yes, the CPA is generally a very good starting point. I know we've prepared in excess of 60 of these for our small business clients, and a large number of those went out between last Friday and probably Sunday, Monday-ish, contingent on the timing of getting some information that we needed that we did not have on file. But general things the banks are asking for, and it's not uniform across the board. The banks have some autonomy here to choose what they want to validate some things. I mean, the SBA said, hey, they need to validate your payroll, and they need to validate your a bona fide business that's in existence. That this isn't some kind of money laundering or fake establishment that's been created to receive funds. And so they got to validate a couple things there. And so generally, what we're seeing is they're asking for your payroll reports. Again, the majority of businesses are based on 2019 payroll, so that's your W-2s, your W-3s, your 941s, your TWC reports. If you provide benefits to your employees, then you need to prepare your monthly 2019 healthcare invoices. So if you got Humana or United, they usually send you a monthly invoice so you can download it from your portal. And then if you have a retirement plan, whether that's a simple or 401k or something of that of nature, and you do any kind of employer match, then your plan sponsor, the company that administers your plan, should be able to give you what they call a 401k allocation report or employer match report. That'll give them third-party evidence that you actually contributed those funds. And so those are the items you really need to pull together to calculate what your maximum loan value is.
Okay, awesome, thanks. That's great. If that's not stuff that you have together, like you said, your CPA can help you put that together. But it sounds like they might have to reach out to some of their relationships too, like you said, health insurance and 401k and any of those other items. So maybe get the ball started, because I think one other thing we're learning here is everybody that's trying to process the paperwork for this, everybody's trying to process the paperwork for this. So there's a backlog. So if you need to get those requests into those folks, get started on it now. Okay, so I'll put you on the spot without making you pick favorites. What banks do you feel like are moving fastest? Do I go to a small community bank? Do I go to a local bank? Do I go to a regional bank? Do I go to do I go to Wells Fargo? Like, is there any sort of guidance that you see right now around what banks are? I'm going to say it this way: what banks are responding to this sort of workload the best?
That's a great question, valid question. I have no dog in the fight. I have good friends at pretty much every bank in town people that I truly call friends that we hang out with away from work. And so I don't want to really pick a favorite, but what I'll say is this: obviously, with the big banks, you have much less of a relationship generally, not always, but generally. And so, we're not seeing as much fluidity with Wells Fargo and Bank of America and Chase and people like that. I mean, yes, you can submit your apps. Wells Fargo had the whole debacle. Most of you probably read about over the weekend. They had to shut down their system on Sunday because of federal mandates, based on that whole false account thing they did a few years ago, or whatever, maybe wasn't that long ago, but you know what I'm talking about. They've recently been opened back up. With the bigger banks, it's kind of a weird process. You go through your online banking, you submit a request for this loan, and then essentially they'll reach back out to you in a week or a day or 5 days. Who the heck knows? No one knows. And then you have to essentially then supply your information. With the smaller, more community-style banks, we're able to put together a loan package and submit it all together at once, and they generally are doing a pretty good job about processing it very quickly. We've had luck with all the local guys. I mean, Clayburgh, Foos Community, Frost, American Bank. We've submitted some to Compass. They've all been receiving them, and it seems like they're getting on them. Charters, another one, Prosperity. I don't want to leave anyone out. They've all done well. We haven't done a whole bunch with credit unions, but there are a couple credit unions doing this as well. Not everyone's participating. We've had a lot of luck with Frost, pushing through a lot of applications.
Okay.
Excuse me.
That's great.
But,
yeah, I kind of gave you that's the award show acceptance speech. I want to make sure you're able to thank everybody, appropriately, not leave anybody out. So good.
They've all done a great job. They've all done fantastic.
Good. So I guess you kind of touched on this a little bit, but in terms of communication, what happens after you submit and after they maybe tell you that they receive it? Do we know what happens next, or are we still trying to figure that out?
We kind of know, and I'll give you, luckily, like I said, we've done over 60 of these things, and it's been with really all the banks I mentioned. So I have an inside track with most all of them. And so essentially what happens is, we'll work up, at least on our end, the way we're processing them is, we'll work up everything we have from the client, which is usually 80%, 90% of the package. We'll get the number. There are some calculations with benefits, and then with people making over 100,000 a year that require a little finessing and reconciliation. And so we build those schedules, do all that stuff, get it ready. There are a few things we may need to pick up from the client, maybe those invoices that we don't normally keep, like healthcare, and maybe the 401k allocation report, etc. Anyways, get signatures. We send it off to the bank. With our relationships, and most CPAs, I'm sure they can send it directly to a banker that they interact with, so it gets some priority. And then at that point in time, it's in the banker's hand, and generally, it's based on whatever's in queue for them and what kind of backlog they have. Generally, we're seeing them get pulled down relatively quickly within a couple hours, and they're putting it through the process. Now, they have to review the numbers and vet them and go through their compliance piece in-house. And then it generally moves along to someone, once it's been vetted by either the banker or a team of people. Maybe someone's vetting the employee benefits, maybe someone's vetting the wages. Then it goes into like a data entry area where it's submitted through the SBA portal. So once the bank approves it and they have everything they need, they'll submit it to the SBA portal. If they're missing something, they'll reach back out to you and say, hey, we need ABC or whatever it may be. Once it's submitted to the SBA portal, now it's in the SBA queue with everyone else being submitted in the nation. And eventually, as it works its way through there, they'll get it as long as if everything's compliant at the SBA side, which on their end, it's not taking a whole bunch. I mean, as long as the bank has certified it, they're usually approving them. Then they will assign it a loan number, and at that point, your funds have kind of been allotted. Now, after that, what happens? Who knows? We don't know yet. The regs say that the bank can use their own documents to originate the loan. I've also heard of banks, they're going to wait till they receive documents from the SBA. So the SBA is going to send them documents on each loan, and they'll get those signed and then essentially fund your accounts. So we're still kind of getting to the tail end of the funding piece. I haven't seen a lot of that happen just yet, but I'm guessing it'll either be happening late this week or early next week on the first level of funding.
Okay, great. Last question for you here. I have seen a little bit of news about some things that some individuals or some businesses can do that are kind of cost cutting. I saw some stuff around like deferring some of like payroll tax related items, and I saw some things around property taxes and some of the deferments there. Do you know anything about that would be good cost cutting or money saving kind of measures, during this time?
So yeah, there's a variety of measures, and I could probably talk for an hour on those. So I'll try to keep it simple and just tell me to be quiet when I need to be. But first things first is, usually payroll is one of our biggest costs. So obviously, if you're not going to do the payroll protection program, then you look at doing some other things with your staff, reducing hours, etc. I think an unknown program that I know a lot of people don't know about, and I've advised a lot of clients on it, and it's helped them keep their staff, is the shared work program with Texas Workforce Commission. That's a great program. You have to, if you furlough your staff between 10 and 40% of their normal hours, so a 40-hour work week, if you cut them back to, somewhere between 24 and 36 hours to help save money on your end, if your volumes are down, then essentially you're going to pay 60% or 70% of their salary, and then they're going to receive unemployment benefits for the difference. So they're working less, but they're still making about the same or very close to what they would on take home. So the shared work program is a great program. If that's something that's affecting you, I would recommend looking into that. Again, it's temporary in nature. You still have to provide the benefits that you're providing before, but you can save 30-40% of your payroll cost. And the employee's not going to take it all on the chin. They're going to get unemployment benefits and potentially a part of the federal unemployment benefits. Still looking for updates from TWC, but they said they have they're fully implementing the federal pandemic assistance. So they should get a partial federal too, which may even make them better off. That's number one. I mean, payroll's been the key, or at least from the tens and dozens of clients I've interacted with on this. Outside of that, you can reach out to your local banker on any debt instruments you have and ask for a deferment. I haven't seen a bank yet that's not doing a deferment. I've seen plenty of credit card companies are also doing a deferment. Most of the credit cards are through big banks. So Chase, Bank of America, Wells Fargo, Citi, they're all doing deferments on credit cards. You have to go through the request process, but it's there. And then ultimately, taking this time to also, look at your discretionary spending through the business and cutting some of that where need be. So everyone's really pulling together. They're doing deferments there, and that's a big help. Lastly, and Doug alluded to it, is if you're not doing the payroll protection program, or even if you are, again, this is where you'd have to get a little bit more specific, because there's some nuances to the payroll protection program. But there's also going to be some tax credits that you can take on your payroll tax reports for family, medical, and sick leave that came out in the Families First Coronavirus Act. So if you're not familiar with that, I have a great resource on it. I can share it with Doug or anyone that reaches out to me. And then on top of that, there's also going to be tax credits in our deferment of your payroll taxes if need be. Now, the deferment on the payroll taxes, essentially you can defer the remaining of your payroll taxes for 2020, and then you have to pay back 50% of that amount through 2021, and then the remainder through 2022. So they're basically going to give you a 2-year interest-free loan on your payroll taxes. But it all has to be paid back within 2 years. And again, 50% of it has to be paid back by 2021.
Okay.
So just, again, those are little things to think about if you really, really need it. I hate deferring payroll taxes, because if you don't pay it back, it can get you in a real mess. But if you need it, it's there. You know what I mean? So yeah. There's a lot of options. That CARES Act was 900 pages.
Wow.
And a good part of that, there's a lot of that for the bigger public companies and some different specific industry guidance, but a good chunk of that is for small business. And so, like I said, we could talk hours about the different provisions in there that may be helpful for both businesses and individuals. But again, hopefully your CPAs are there. You can reach out to them. Like I said, when we're available, we're definitely glad to answer questions or take calls. It's just a wild time, but we're all trying to pitch in together.
Great. Denny, that's awesome information. Thanks. I'll make sure and get your contact information here on the next slide after this next one. But man, that's great. Thanks for the information. I want to talk a little bit about some of the sort of security aspects that we kind of run against right now. So I'm sure a lot of you guys have heard around Zoom, and people are not using it now because of some insecurities. The meeting we're on right now is on Zoom. So here are a couple of things. So basically what happened is there's this thing they started dubbing the Zoom bomb. So what was happening was people were having public meetings like the one we have right now. And when you start that meeting, Zoom just randomly gives you a 9-digit code for the joining that meeting. Well, Some very industrious, we'll say bad guys or just punk kids, we don't know, wrote some software that would go through and just check as many 9-digit numbers as they could looking for active Zoom meetings. And then people were jumping on those Zoom calls that they were uninvited to. So they called that the Zoom bomb. There's a couple of scenarios of it happening with like school kids and inappropriate things and kind of bad things like that. So Zoom put in some measures even in the last week to try to combat some of these security issues around Zoom. So one of the things that is recommended if you're using Zoom, everybody that's using Zoom for a pro account has what they call a personal meeting ID. It's kind of a meeting ID that belongs to that person, and you can use it over and over and over again all the time. You would only use that for private meetings. You would never use that personal ID for like a public meeting like the one we're having right now. Second recommendation is that you set a meeting password on all of your meetings. So what this does is it prevents the bad guys from guessing that 9-digit meeting number. They would also have to have this randomized meeting password. You can still send the recipients of your meeting a link that has the password in it, so they don't even have to type the password in, but it prevents the bad guys from just trying those 9-digit numbers and Zoom bombing your meeting without a password. Another recommendation is to restrict the screen sharing to the person that's hosting the meeting. So if you initiate a Zoom meeting, don't allow others to just share their screen at random during the meeting. That's something that's beneficial in Zoom when it's a private meeting and you have like collaboration where you're trying to get your people or other folks on the call to participate in the call and share things. But if you're doing a public meeting, you wouldn't want to have that set up. You guys might all notice that today when you joined the call, you went to the waiting room first. That's another feature that's been implemented. So me as the host, I was able to see people connect to the waiting room and then individually allow them to join the room. The hope would be that if I jumped on and I noticed that someone shouldn't have been, somebody we don't know or somebody that looks fishy, we would be able to not allow them to join the meeting during the meeting. And then subsequently, we could also boot them out of the meeting if they joined and weren't. And then the second or the last thing on here is around muting the people that join the meeting. You'll all notice that when you joined muted. And so what that does is it keeps you from having people just jump on your meeting and start talking. It gives the host a little more control. So all of these things that Zoom implemented in the last couple of weeks are to combat this Zoom bomb or people basically joining meetings when they weren't invited. So use those steps if you're doing meetings. Nearly every video conferencing platform has these settings. They're just probably called something different. Where Zoom got in trouble is it got a lot of popularity really fast. And so that obviously gave some attention to sort of the hacking and, the bad guys on the internet and trying to do things that they shouldn't around Zoom. They kind of knew that millions of people were trying to use it to work from home, and so they kind of preyed upon it. Last thing, and I didn't put it up here in the slide, but the file sharing and chatting that's built into Zoom, I wouldn't use that for anything that you wouldn't want out in the public. Don't transfer super important files over the Zoom chat. Don't transfer any PII or PHI or any data you wouldn't want out there on the internet. There's some security issues around the chat, so just don't use it to transmit things that you wouldn't want to be out there. So here's Denny's contact info. Like I said, Fields and Nemec, there's his email, there's their main office phone number. I'll vouch for Denny. He's a fantastic CPA. I've really enjoyed working with him. I did want to give just a minute before we wrap up to anybody that might be on that has a question. If you have a question, you can hit me in the chat real quick and let me know that you have a question, and I'll unmute you so you can ask a question. So I'm going to give just 1 minute here for somebody that might have a question to ask a question. And if there aren't any questions, we'll wrap up. But we'll give just a minute here for somebody to ask a question. Great. Well, we won't wait for any more awkward silence since there weren't any questions. That's okay. We're going to post this on our social media and our YouTube channel, so we'll be able to let people share this out to folks that weren't able to attend. Once again, Denny, thanks so much for joining us today. That information was great. I think it will help the small business community in Corpus and, help us all weather this storm. I think everybody wants to get through this and be better on the other side. And I think we all want to get through it as fast and painless as we can. So everybody do their part to do that. And yeah, Denny, any parting thoughts? Thanks for joining us.
No, just thanks for having me. Wishing everyone safety and prosperity and good luck as we try to work through this. Definitely unprecedented. It's been an eye opener for many of my colleagues and for us as well. So, like I said, just look at the options available to you. Use your partners, affiliates, resources, whoever they may be, that your trusted advisors. And there's going to be a lot of different things changing. I mean, this CARES Act and the PPP program have little tweaks and nuances that have changed daily. And so just know that there's a lot of good information out there. There's a lot of misinformation. So make sure to educate yourself and check the validity of your sources. But definitely look for opportunities there to protect you, your family, your employees, your business, etc. So
great. All right. Thanks, Denny. Appreciate it. Thanks, everybody. Bye.
Thanks for having us.